Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 10th of March. Starting off with the FTSE 100, where we are below that uptrend line there from January, 80.80, the nominal level there, and below that, looking for 8,600, probably worst case at the moment. The 50-day line, 85.55. RSI has already pushed below neutral 50 this morning, and as you can see, we've had quite a few red candles there for the start of March. So the idea here is that maybe we have to have a bit of a selling climax towards that 50-day line before we can rise again. Moving on to the DAX, and here the picture also slightly negative. Main support here 22,300, and the floor of the channel there at 22,000. If we're really lucky, we will have closes above 22,300, which was the initial February resistance, old resistance becoming new support. RSI still above neutral 50, and we bounced off that, so perhaps in this case the idea of holding 22,300 will be one that just about works. Onto the Dow, which obviously we looked at yesterday and hasn't changed yet, but just a reminder that we are in a slightly difficult situation at the moment. The 200-day line, 41,900, too close probably to be avoided, and that's also the 2025 low, so everything hinging on that 41,900 level. To get out of jail at the moment, above 43,000 is what we're looking for to get back in that channel from March last year and then head towards the all-time highs. But I suppose in a way, given the lay of the land, the market's actually doing rather well, considering the uncertainty, tariffs, etc., and obviously Russia, Ukraine. Moving on to Bitcoin, which is the nail biter at the moment. Here we've had another test of the 200-day moving average and also the floor of that rising trend channel. 80,600, I suppose, the level there. And we've tested that. In fact, we tested 80,000 twice in the last couple of sessions. So it looks as though we'll hopefully have the low in here, but anything below 80,000 on an extended basis, and it would look as though we've got a massive top in there from back in November. So crunch time this week probably for this market. Positive is the way that the 200-day line is still rising, so that is something that would hopefully drag this market higher, even though we have probes below it at 83,300. Moving along to gold, and here back in a range, really 28.80 to the highs, so 29.80, and hoping for a resolution to the upside. Top of the channel there, 30.20, and best case is, I suppose, at the end of this month, if we stay above 28.80, we'll head up to 30.20. Otherwise, a bit like the other markets we looked at, we've got the risk of a dip towards that 50-day line at 28.20. Moving along to the stocks, and Avacta was an interesting situation at the moment in the sense that the company released some money and started off well today, opening at the low and so far at the high of the day. Friday's peak, just above 40 pence, is the marker there, so that level around 40.5 pence. Need to see an end of day close above that to give us a move to the 50-day line at 46 pence. Otherwise, we're still struggling within that falling formation. And one final dip to the low 30s cannot be ruled out. But it looks as though we are on our way towards a move into the low 40s. The stock of the weekend, I think in terms of buzzing and everything else, was Andrada. Everyone trying to pin the tail on the donkey here, but I think we pinned the tail absolutely on the nose in the sense that, that's not mixing too many metaphors. Here we've hit the initial target we had at the top of that November triangle at 3.25 pence. Above 3.25 pence on an end of day close basis. The next level up is 4.7 pence, which I don't think anybody else will tell you or want to tell you. Ideally, we stay above that 200-day line now at 3.1 pence. Whatever happens, that would indicate a proper change of trend. And as you can see from the daily chart, we haven't been above the 200-day line since November 2023. So this is a significant turnaround and something that fans of the shares should quite rightly be happy with. The other point to note is that we had an unfilled gap off the low, one of our favorite signals, bear trap gap reversal, and obviously the shares have followed through well on that. Bullish divergence as well with a low for March, but higher RSI trace, so multiple positives there apart from the fundamental change that some people are noting, and a bit of share buying as well. Moving on to EDX, which had its big tie-up with Royal Marsden announced today. Golden Cross last week, top of the channel approaching at 14 pence. Above that on an end-of-day close basis, we're looking for 20 pence plus, perhaps as soon as the end of next month. I think the shares have spent enough time consolidating and taking up the slack, etc. And a reminder that we've had two unfilled gaps to the upside already this year, which is what you see in the most strong of situations. In fact, we already had two unfilled gaps to the upside for the end of 23 going into 24. So history repeating itself. On to Cora, where the celebrations via the government of Mali. And here you can see that the shares have blown the doors off in terms of our previous target there, which was which seemed to be rather ridiculous, but 3.7 pence, and above that on an end-of-day close basis. Looking for the next target here, which would be an old resistance line projection there from back in 2022, which is heading for 6 pence. So let's see if the shares deliver. That's basically the top of a rising trend channel base, a large one, from basically the summer of last year, and then projecting that to 6 pence, but above 3.7, looking for 6 by the end of next month on Cora. Next up is Galantas, which is still rising on no news. In fact, gaps to the upside, sideways shuffle above a rising 50-day line. So we're quite confident now that we could hit up to 8.5 pence while we're on the right side of the first gap there at 4.3 pence. So let's see if the shares can deliver on that. Also, we've got a bear trap island reversal, so we gapped down in November and have gapped up twice in March. So that is actually our top signal there. Let's see if the shares can deliver the goods. On to a stock which I got right, and don't think anybody else has even noticed, which is Great Southern Copper. Here we've managed to hit the first target there at 3.1 pence. Second target there is at up to 4.5 pence, which we're looking for, obviously, over the next week or two. In fact, the way things are going, might even get it by the next day or two, but certainly above the recent support area, around 3.2 pence. Looking for 4 pence plus relatively quickly. GCM has moved after a long time, and here you can see that we basically had lots of consolidation near the lows, key reversal to the upside today, and the view is that above the 50-day line of 1.6 pence on an end-of-day close basis, we're looking for the top of a triangle, which is heading for 2.4 pence, and looking for that by the end of this month. But the key here, staying above that blue 50-day moving average. On to MTI Wireless, which has hit a target there as well. The second target we had, that was at 67 pence, and leaves us flailing to find the next level up, which hopefully the shares can deliver relatively quickly given the way they are. Here we have the uptrend line there from back in the end of November 2022, and that's heading for 68 pence. So hopefully we'll get that over the next week while we're above recent support and the gap at 59 pence. On to MFAI, otherwise known as Mindflair, where there's actually been a profit taken by the company, rising 50 and 200-day lines ahead of this announcement. So maybe one or two people were anticipating the good news. Top of the range here, 1.5 pence, and we should get to that while we're above the floor of the gap and the 200-day moving average at 0.8 pence. Last week, or on Friday, we saw Phoenix Copper rise on no news, and it's even more intriguing that it's still rising on no news. Above the 50-day line now at 4.4 pence, looking for up to 8 pence by the end of this month. And obviously that might be driven by funding news. On to a stock which I hardly ever look at, and nobody else I think it looks at at all either, which is Pennant. Here we managed to break out of that falling trend channel there at 30.5 pence. The next level up after the extended consolidation should be up to as high as 46 pence by the end of next month. Perhaps expecting the kind of push higher that we had at the beginning of 2023 to happen over the next 4 to 6 weeks. Ideally, we stay on the right side of the 30 pence zone. On to a stock which is threatening to break out and probably should break out. We've had a gap close signal and an unfilled gap to the upside through the rising 50 and 200 day lines. We've had a golden cross for Quartix by, at the end of last week. Initial target here in the top of the range, £2.10. But if we get an end of day close above that, which I think we should after the latest clean out of the weak hands below £1.50, the next target there is up to £2.85, which we could see by the end of next month. Finishing off with one of the most followed favourites around, which is Upland, and here after a bit of jiggery pokery just below the 200-day line at 1.5 pence, looks like we're on our way again. We had solid candle on Friday, opening at the low, closing at the high, so far repeated the trick today. Still looking for 2.2 pence while we're above that 1.5 pence zone, and the RSI rebound above neutral 50 gives us even more hope that this could be a big move. That's it for me today. More updates tomorrow.